Debt ceiling drama. Welcome to Looking at the Markets. Are you worried about the debt ceiling? I'm not. I've been around long enough and I've been in the markets long enough to know that historically, I cannot make any guarantees about the future, but historically, Congress and the president, whoever they are at the time, historically, they always work it out at the 11th hour in the 8th or ninth inning, whatever. They always work it out at the last minute because these are politicians. They want to keep their jobs. They don't want to be seen as responsible for an economic meltdown or whatever. So they have to work it out. But when the deadline is coming up, it makes for great headlines. And again, no guarantees. Hey, maybe they won't work it out this time around, but I strongly suspect that they will. So look at the size of the font on this Market Watch headline. U.S. could default on debt as soon as June 1st if Congress doesn't increase the borrowing limit, according to Treasury Secretary Janet Yellen, and they put up a picture of her looking really worried or whatever. It's a lot of suspense, a lot of drama. It's great for headlines, great for getting clicks and views. Okay, I get it. And Market Watch, I'm not trying to pick on Market Watch in particular, but they have plenty of headlines here. What happens to the U.S. dollar if the debt ceiling isn't raised? What happens to Social Security payments? Oh no, if there's no debt ceiling deal. So they're behaving as if they don't know, as if they have no idea whether the debt ceiling is going to be raised. Historically, the U.S. government has always raised the debt ceiling because that's what the government does. It prints up money and it increases its debt to pay for everything that people want so that politicians can get votes and everybody will be happy in the short term and they can kick the can down the road and just mount up the debt to pay for things that people want right now. It's what politicians do. It's what governments do, especially the U.S. government, but other governments as well. U.S. is not the only government with debt, of course. But it's great drama, great suspense. And until they work it out, there will be brinksmanship, there will be threats and arguments and so on, and posturing so that both sides of the conservatives and the progressives can look like they're acting tough and fighting for what they believe in, but in the end they'll work something out. No guarantees. I cannot guarantee anything. This is not a prediction. You have to decide what you want to do with your money, always. But if this temporary fear-mongering causes the markets to go down, I will view that personally as an opportunity for me to buy things that I like. Simple as that. So this is from Isabel Net on Twitter. Debt ceiling. The U.S. debt ceiling has been raised 89 times since 1959. Is this time any different? Yeah, I mean, do you really think that they're just not going to raise the debt ceiling? I mean, it's so easy to just raise the amount of debt that the government can mount up. I mean, it's not easy for them to work out the numbers and the specifics, but the government can always rack up more debt and more debt and more debt. All right. It's easy for politicians to spend other people's money. And if you think they're not going to do it again this time around, well, you may be very disappointed. I believe this will be number 90, the 90th time since 1959 that the government will again avoid the fiscal cliff, or whatever you want to call it, the debt ceiling, and they'll raise the debt limit once again. Most likely, no guarantees. This is from Ryan Detrick on Twitter. The last time the NFIB Small Business Optimism Index was this low was in January 2013, according to Ryan Detrick. That was right at the tail end of the fiscal cliff drama. Remember that? And it also wasn't the worst time to be bullish on stocks. The S&P 500 gained 30% that year. No guarantee it's going to happen again this year, but this could be a terrific buy low opportunity. Buy low, sell higher, right? And finally, from Charlie Bolello, exactly 1 year ago, CNBC aired its last Markets in Turmoil special report. And what happened after that? Well, S&P 500, it's up since then, and this has, according to Charlie Bolello, a perfect track record. Look at this. Just every time markets are in turmoil, if you had bought stocks historically, you would have done pretty well if you just bought and held it. So there you go. So if CNBC pulls out its markets in turmoil, fear-mongering graphic, again, history tells you that will be a great opportunity. So if you want to be worried about the debt ceiling, that's up to you. I'm not worried about it. I think politicians are going to do what politicians do. And I think the government's going to do what governments do, which is print and spend money at will once again. So good luck. Be cautious out there. Still have an exit strategy, and you don't want to over leverage yourself on anything. But if the markets go down at all, I think it's going to be a terrific opportunity. So thank you so much for watching and listening. I will talk to you again soon.